Hell is about to break loose in the markets as everything is shifting. And if you don't keep your eyes on it carefully, you might lose everything. I'm talking about the biggest bubble that's about to burst. For those of you holding on to your 401k or dreaming of a retirement life by the golf course with your cup of hot joe, you better rethink it again. Because it's not just me, but a whole lot of other people agree that the biggest stock market crash is just lurking around the corner. The current events of the world today are incomparable, nothing like we have ever experienced before. Well, we knew we never had the perfect leaders or the most competent ones, but they now have hit the bar so low it's crazy. Now, the market crash I'm talking about is bigger than we imagined.
Welcome to Financial Market TV. If you're new to the channel and enjoy content like this, hit that subscribe button and the notification bell. Also, please don't hesitate to share your comments down below and give this video a like. Let's get started.
In March of 2020, there was the biggest crash in the world history of stock market. And if the date doesn't ring a bell, that was when the COVID outbreak hit the globe and everyone's priorities shifted to toilet paper and social distancing. Naturally, the stock market was not on anyone's to-do list, so the people are missing out on one of the biggest cash attacks in the market. The world could be totally clueless. So the good news is that we can actually make a fortune. Yep, this will be the perfect opportunity to earn cash. A big percent of people just watch the stock market and that's it. They don't have a clue about how much home prices are in the neighborhood, which doesn't help them at all. So what exactly is coming? If you look into the future, the baby boomers are already, well, old. And they are actually the pioneer generation to have the 401k. This came off from what we call defined benefit pension plan to a defined contribution, which is the 401k. So their generation is riding on that, and if the market crashes, they're gone. Whereas older generation like the World War II gen had a defined benefit plan, similar to that of what Ford still gives away. In other words, during an extreme market crash, you'd still get a paycheck for life. So yes, the baby boomers are the ones who should be extremely worried. So take a look at the people you know, your parents, your grandparents, if they are baby boomers. You have to listen up because you don't want them knocking on your door to loan a bag of flour or something soon. Do this for them and their checkbook. Again, let's take a look at the bigger picture of what's currently happening around the world. Starting off with something basic, we have economics. And more importantly, bubble economics. And this is happening on a global scale. A lot of countries are into this. So what do? Instead of paying their bills and debts, they print money and more money. This is their alternative security for their economy, at least for a while, because then it'll start to go down. This is exactly what happened back in the 2000s. The market crashed, and did they fix the problem? Of course not. They instead printed more money. And again, in 2008, we had another crash. You think they would have stepped up by then, but no, they did the exact same thing. And I'm certain that you don't have to be a graduate from an Ivy League school to know what's gonna happen next. This makes the real estate market hot, as well as the bonds market, but this is based on bubble economics. In the United States today, Social Security is going down, state pensions are going down, Medicare is also going down, and what is America doing about it? Bubble economics. The market value keeps going higher and higher, and if they use this as a solution, everyone knows what happens to a bubble once it reaches a maximum point. It pops, gone, and it will hit a lot of citizens. For example, we have the pilots of the United Airlines. They're gonna go broke. Going to college and getting a degree will not be able to save them. Why is that? Well, it's because they live in a fairy tale where getting a degree and getting a job all ends with a pension. But it's not a happily ever after once the crash happens. This is what we call MMT, or modern monetary theory, which is exactly why Bernie Sanders or Elizabeth Warren are rallying to attack the rich and point their fingers at people like Donald Trump for the market crash. But this crash was already headed towards that direction to begin with, especially in 2016, and it just so happens that Trump got elected into office not long afterwards. As they say, what comes up has to go down, and this crash is coming down big. So there is a huge opportunity here for people to invest right here. You know, in the school system, there are two groups based on Pareto's principle. There's an 80 versus 20 percentage. So 80% of the people are the ones taught how to fish, and the 20% are just given fish. That is why socialists and communists are saying that they are good for the people. And that's true at some point. But the number of people who need to be given fish only grows in percent. And just like back in middle school, we were taught to help the poor, but the right way is not by continuously giving them money. And now let's move on to the economy dying. And that is because of the Fed's incompetency. Moreover, there is the fact that they cannot save the economy from going downhill. All that they have been doing since 1971 is printing money over and over again. Instead of being the solution, this just dug a hole into the problem. So here is a breakdown of how much money we're gonna be losing and why the Fed is incompetent. I'm sure you're aware that $1 trillion is a whole lot of money. If you have $1 trillion, you can spend $1 every running second and it would still take you up to 35,000 years to spend it all. But that is metaphorically speaking, since we obviously won't be around after a few hundreds of years from now. Now, they are probably printed up to $3 or $4 trillion in the last few months. That's how much they're actually printing. So let's say you're saving money. Well, congrats, because once you work for it and pay taxes with it, what you have is legitimate money value. But with the Feds printing trillions of dollars, they're gonna be paying you nothing for your savings. You get nothing. The Fed is literally doing you no good. Apparently, Bitcoin also just had a halving. What does that mean? Well, they print and produce less of it. So while this happens, the Fed is printing trillions, thus making the dollar or any other currency way softer. Bitcoin, gold, or even silver are all getting harder, which is why it's not such a good idea to buy or invest in these kind of assets. So if you want to keep saving your money and investing in the stock market, that's probably a better idea. What the CEOs of the stock market companies did was make a side deal with the Feds and got billions of loans for them to spike up their stock prices. So let's get this straight. The stock prices are shooting up high, all mommies and daddies are watching our 401ks and IRAs with high stocks, and the Feds continuously print out money, even indirectly loaning billions to CEOs only for them to pop the stock market. You can see why we are headed in a not so pretty direction, and this is a warning. So here we are, we go to school, get a degree to land a mediocre job, maybe a small entrepreneur and put up a little pizzeria or coffee shop, but you pay taxes. All of our profit, what we can call hard-earned money, is debt on taxes. You work for money, you still pay an amount for taxes. So those startup companies or the little guys in the business world, they would be paying a higher amount in taxes, and those big shot CEOs like Elon Musk and Bill Gates, all wealthy names in the industry, actually pay less tax. So coming from us, you can put your own deals together, you can steer away from bond stocks or mutual funds. Again, put together a new deal. You might even end up paying no taxes at all. You gotta find your own secret recipe for that kind of success though. Best of luck!
Thanks for watching the whole video. Again, if you're new and like this type of content, subscribe to our channel. And don't forget to leave a comment down below and hit that like button. Also, click on the notification bell to get updated on our weekly uploads. See you in the next video!